Hey everyone, and welcome back to the channel. Today, we are diving deep into a world that often seems shrouded in mystery, the financial habits of the ultra-wealthy. Forget stocks, bonds, and savings accounts for a moment. We're talking about something far more tangible, something you can touch and see. We're exploring how the rich use gold and fine art not just as investments, but as a form of private currency. It's a fascinating concept that completely changes how you might think about money and value. So, grab a seat and let's pull back the curtain on this exclusive financial world. First, let's talk about gold. For thousands of years, gold has been the ultimate symbol of wealth and stability. While the rest of us see our paper money fluctuate with inflation and economic policies, gold holds its ground. It's what's known as a store of value. Think about it. A central bank can print more money, effectively diluting its value, but they can't print more gold. This inherent scarcity makes it incredibly attractive. For the wealthy, holding physical gold isn't just about hoping its price goes up. It's about having a safety net. A universal currency that is recognized and accepted anywhere in the world. No questions asked. It's financial insurance against the worst-case scenarios. Against the worst-case scenarios: economic collapse, currency devaluation, or geopolitical chaos. It's a way of saying, no matter what happens to the system, my wealth is secure. So, how do they actually store it? You're probably picturing a Scrooge McDuck-style vault, and you're not entirely wrong, but it's far more sophisticated. The super-rich don't typically keep stacks of gold bars under their beds. They use high-security, private vaults located in stable, politically neutral countries like Switzerland, Singapore, or even Delaware in the U.S. These facilities are fortresses, offering not just physical protection but also legal and financial discretion. The gold is often held in what's called allocated storage, meaning specific, numbered bars are owned directly by the individual, not just as a share in a larger pool. This ensures true ownership. For smaller, more immediate needs, some might keep a portion in a secure home safe, but the bulk of it is stored professionally, away from public knowledge and potential risks. It's all about diversification of risk, even down to the physical location of their assets. Now, let's shift our focus to something equally fascinating but far more subjective: fine art. How can a painting by Picasso or a sculpture by Giacometti act like currency? Well, in the world of the ultra-rich, it absolutely does. High-end art has become a global multi-billion-dollar market. Much like gold, a masterpiece is a finite asset. There will never be another Mona Lisa. This scarcity, combined with cultural significance and historical importance, creates an incredible store of value. But it's more than that. Art is portable, private, and operates in a less regulated market than traditional finance. For the elite, a famous painting can be a way to move millions of dollars across borders with relative ease and privacy. You can't exactly wire a painting, but you can certainly fly it from a freeport in Geneva to one in Singapore. What are these freeports I just mentioned? They are the art world's equivalent of Swiss bank accounts. Freeports are massive, ultra-secure warehouses located in tax-friendly zones, often near airports. Inside, priceless art, wine, and other collectibles are stored in climate-controlled museum-quality conditions. The magic of a freeport is that goods stored there are technically in transit, meaning they haven't officially entered the country. As a result, transactions can happen within the freeport without triggering import duties or sales taxes. A billionaire in New York can sell a Warhol to a collector in Hong Kong, and the painting itself might never leave the freeport in Switzerland. The ownership just changes hands on paper. This makes trading art as seamless as trading stocks, turning these masterpieces into highly liquid assets within this exclusive circle. So, why not just use money? Why go through the trouble of storing gold bars and priceless paintings? It comes down to a few key principles: wealth preservation, privacy, and diversification. Paper currencies are subject to inflation and government control. The value of your dollar today is not the same as it was 20 years ago. Gold, on the other hand, has preserved wealth for millennia. Art, while more volatile, has shown incredible long-term growth and offers a hedge against traditional market downturns. When the stock market crashes, the art market often remains stable or even rises as investors seek alternative assets. Furthermore, these physical assets offer a level of privacy that digital or bank-held money simply can't. In a world where financial data is constantly being tracked and shared, owning a tangible asset that exists outside of that system is the ultimate form of financial independence for those who can afford it. Let's look at the psychology behind this. Owning a tangible asset is deeply reassuring. You can see it, you can touch it. There's a primal satisfaction in owning something real, something that isn't just a number on a screen. For the ultra-wealthy, who often deal in abstract financial instruments worth billions, owning a gold bar or a historic painting provides a grounding sense of real, enduring value. It's also a status symbol. Displaying a famous work of art is a public declaration of taste, sophistication, and, of course, immense wealth. It's a currency that buys not just goods and services, but also social and cultural capital. It opens doors to an exclusive club of collectors, museum boards, and cultural philanthropists, creating a powerful network that transcends mere finance. So, what are the takeaways for the rest of us? While we may not be buying a Monet anytime soon, the principles remain surprisingly relevant. The core idea is to think about wealth beyond just the numbers in your bank account. It's about diversification and owning assets that are untied directly to the whims of the stock market or a single currency. For us, that might mean investing in different types of assets, understanding the impact of inflation on our savings, or even just appreciating the enduring value of things that are rare and beautiful. The strategy of the rich teaches us that true financial security comes from having a diversified portfolio that can weather any storm. It's a lesson in long-term thinking and understanding what value truly means. It's not just about getting rich, it's about staying wealthy, generation after generation. And that's a wrap on our look into the secret world of gold and art as currency. It's a glimpse into a financial strategy that's as old as civilization itself, yet more relevant than ever in our complex modern world. What do you think? Would you ever consider a tangible asset like gold as part of your savings? Let me know your thoughts in the comments below. I read every single one of them. Thank you so much for joining me today. If you found this interesting and want to explore more fascinating topics about how the world really works, please hit that like button and make sure you're subscribed to the channel. Don't forget to ring the notification bell so you won't miss our next video. Until next time, stay curious.